Hey, what's up, guys? We are going to do a weekly market review for the last week of November. So, the week starting Monday, November 27th. And to keep it short and sweet, I always like to kind of, you know, start it off short and sweet for the people who don't have the longest attention span. And I think my weekly bias, or my bias is, I don't know. So, yeah, so some people are probably going to be like, oh, fuck this guy. Let me go find someone who knows. But my opinion for, I think, most analysts that are studying smart money concepts, I think they would also agree with this theory. And I'm going to go a little more in depth in this video. I think, gun to my head, I'm like 60% bullish on the week, 40% bearish. So I am leaning more towards upside. But I think it might be important to wait and sit Monday out. But I'm going to do a pretty thorough top-down analysis in a moment. But in terms of, let me go to the weekly first. For the short and sweet, we're still targeting this high right here. But I think we could use a pullback, and I'll explain why. But to explain why, let's start with the monthly. So this is going to be long, and it's going to be pretty in depth. So I hope you're in a position where you can dedicate your time to it. Looking at the monthly chart, so we're targeting all-time highs. This is the continuous chart for ES, and here's the ES S&P all-time high. What I have drawn out here is a fib that is anchored at the bottom of this COVID crash to our all-time high. Now, if you notice, this was a crazy run up that lasted about 2 years. 2 years. Took out sell side, but for a moment, let's just kind of ignore the time frame. So what we did here on this technical chart, we swept sell side, swept the low. Looks like we tapped off into these down close candles. The bodies didn't break lower, so swept liquidity, and then we went on a crazy ride up. When you draw the fib, you can see that when this is really just a higher low. So this market structure is still bullish. We retraced to about 50%, just shy of 50%, but it was tapping in to these down close candles, which are at 50%. So I think you can argue that that is a discount. So it came all the way down to a discount and then continued higher. And remember, at this time, if you were trading and paying attention to the markets, people were thinking, crash, recession, whatever. But if you are, purely technicals, this was just a higher low off of this insane bull run. Came down, and then you can see it continued. So technically on the monthly, we're bullish. And we've been bullish. You had this like market structure shift right here. It just came down between taking out this low, but what I think is this was really just a retracement off of this huge run up. Let's go to the weekly. Okay, weekly we start getting a little more interesting. I'll give you some time. I'm gonna flip back to the monthly real quick. A lot changes when we're gonna swap from these. We're gonna go from monthly, weekly, daily to 4 hour. We'll stop at the 4 hour, but every time we change a time frame, it's gonna add a lot more candles. And so just kind of pause the video, do what you need to do, to get your bearings once, I switch over. But remember, this is the high, retracement to 50%, long-term low, continuing this bullish structure, came up, came down, we're coming up again. So we came down to a discount, but we are in the premium range. So we have to be careful since we are in this premium, and look how close we are to this all-time high. We will be targeting that until structure tells us otherwise. But when we go down to these lower time frames, you'll start to notice the kind of theme of this weekly outlook is going to be that we are in a very deep premium on these higher time frames, and we just have to be aware of that. We're not going to try and pick tops, but when we get down to the 4 hour, and then when we are day trading the sub 4 hour, we need to make sure that we are buying at discounts in relation to the time frame and market structure we're at, because we are also at a very large premium on the higher time frames. And I'll tell you how we're going to as we go through this video, I will explain how we are going to make sure we are still buying at discounts in relation to our time frames. So I'm going to switch to the weekly. If you need a second to pause it, I would do so, just to get your bearings straight. I've been staring at this for a while, so I kind of get it. This is that all-time high. This was that retracement to 50%. Now, this is a new fib. This is a new fib marking out this dealing range. So if you notice now on the weekly chart, this retracement in terms of this market structure on this time frame, look at this. We came right down to 50%, right down to a discount level. And what this was right here is that market maker sell model that ICT was, framing in his last area of trading. My apologies. In his last area of trading, or last time. But what I want to draw your attention to is these equal highs right here. Now, these aren't equal highs on the December contract, but that doesn't mean that they're not relevant. So prioritize the current contract, but we can still kind of glean the same narrative. If I think this high on the December contract is a little higher than that, but again, when we talk equal highs, we talk relative equal highs. So relative, I mean, they have to be close. It has to be an area where people will see as support or resistance. I will say we will remember about midway through December we will be rolling over to the March contract, so don't forget that. And I have yet to look at the March contract, so I don't know what these highs look like on it. But again, the March contract could look a little different from the December contract. And when we are trading the March contract, I suggest that you prioritize the levels on the March contract. But remember, we are using all of this to just build a narrative. So they all will be close enough where they will be telling the same narrative, because it's the same market. So I think we are going to be targeting these equal highs. I think we still have them. If you watched my quarterly shift video, you know that we still have, and we'll get into the quarterly shift in these timeframes on the daily chart, but I still believe these are the targets for our quarterly shift as well. But understand, it's barely been 20 days, and we have a 60-day window for this quarterly shift. So we could retrace in the next 20 days. So we're about to close out 20 days, I think, next week. And in that 20 to 40 day window, it could just spend time retracing and, maybe retrace, consolidate. And then in that last 20 days of the 6-day window, it could run for these highs. It could also do everything I just explained in like the first 10 days of this 40 day, or, right after, from 30 to 40 days. It could do it then. But we're going to be paying attention. I'm going to explain the PD arrays and just to make sure we buy at a discount. So again, this is this dealing range on the weekly. We tapped into a discount and now we are sending it higher. Now let's pay attention to these weekly PD arrays. If we were to retrace, these would be, let me get this off. These will be the levels. So if it would be reasonable to expect a down close candle, correct? We don't have to, but if we are about to print a down close candle, these are the levels we want to be looking at. So we have this weekly fair value gap. We have this weekly right here, this dashed line. Let me zoom in for you. This dashed line is the top of this wick. That is the candle that is part of these consecutive 2 down close before this aggressive run up. So we're treating this like a bullish order block. I marked the candle wick high and the body of this candle. If you do see us get through this, say we get all the way to the bottom of this, I will then start to look at this single candle. But in terms of, when we get there, we'll talk about that then. I do think we have a lot of levels in between that, so we'll prioritize these, but just understand that that is also a level of concern, or not concern, but importance. So if we are to print a down close candle on the weekly, these are the levels that we would be looking at in the weekly. Now what I'll be doing is I am going to now go to the daily, and we are going to look at PD arrays that are nested inside of these weekly PD arrays. And remember, the bias is still bullish because of the monthly structure is bullish. The weekly structure is still bullish. And we have these equal highs. Okay, I'll give you a moment, maybe pause the video, kind of get your bearings. So, same fib, high, down to this low. And now that we are looking at the daily chart, it tells a very similar story to the weekly, but now we're a little bit more refined. So as you can see, we had this aggressive run up. We had this one down close candle. Then we ran up again, taking out these highs. Last week, what we did was we spent time wicking over this buy side. Again, this is our target up here, but we have had a lot of up close days, especially with 1, 2, 3, 4, 5 days where, we don't really have a swing low in here. So I wouldn't be, we have our next swing low to the downside is right here. Excuse me. So if we do open next week with a down close candle, again, we've had 1, 2, 3, 4 up closes. A down close wouldn't be crazy to think of. And again, that's another reason why some people say it's good to sit out Monday, because you can kind of get an idea of what the week is. It's tipping its hand on Monday. But on the daily, I will be looking to see if we want to come down and touch into the top of this daily fair value gap. It is nested inside of this weekly fair value gap. If we did want to dip lower, we have this order block right here, this daily order block. As you can see, it lines up pretty nicely with this weekly order block. Remember that weekly level? I said this was the top of that. Those on the weekly, there was those two candles. One had a really big wick. This is the top of that wick. This is the body of that wick. And when you're doing these weekly analyses for yourself, keep these levels, like transpose these higher time frame levels, and it's good to do that. So we have this daily order block lining up nice with this weekly. This also, I didn't touch on this. This was a weekly fair value gap, as you can see right there. So we do have these three levels. If you were to draw a fib from high to low, they are pretty close to the middle, the discount. So if it did want to retrace lower to a discount to accumulate to send it higher, that could be done there. Let's see if we draw a fib from this high to this low. Yeah, so about the same area. So back to the daily. I'll be seeing how Monday prints. I think Monday will be an important day. See if it wants to come down, tap, and accumulate to go higher. I would be interested to see if Monday just shoots for these highs. They are pretty close, so like they are close enough where I could think we could get it in one day. Again, kind of somewhat similar to what I said about these. It will be important to see how we take these highs. I would be interested in that. On smaller, I don't want to say it like that. Oftentimes when we see price run to a level for liquidity to then reverse, sometimes it does it very quickly and then it reverses just as quickly, and it did it quickly because it was just going up there to run stops. Now again, remember, the time's fractal, so I am a little weary of how fast we are, how much ground we covered in such a little time on this weekly and really this monthly time frame. Well, you can see how fast it is on the monthly, but the weekly kind of shows it a little better, and I'm wondering if we are going to come up and sweep these highs for liquidity and then send it lower. I am a little bit of a bear in terms of like the 2024 outlook, and I think, again, I don't want to get too much into fundamentals on this channel, but a lot of people are saying, recession in 2024. We have, a growing conflict overseas I think if we were to get a recession in 2024, it would make sense because we never, after 2019 on the monthly chart, we never stopped the bull market. This retracement, it was just a retracement on the monthly. And yeah, that took a whole year, just about, I guess, less than a year. But structure on the monthly is still bullish. So I wouldn't be surprised. Again, here are these equal highs. I wouldn't be surprised if we came up, put a wick above those, and then rejected lower. And then we finally broke structure on the monthly. And then the technicals and the fundamentals line up, and so at some point in 2024, everyone says the recession's here, and all the technicians are saying, well, yeah, we're in a bear market. We've shifted structure bearish. So I could see that lining up, and I could see again, this being a bearish, like an order block, basically forming on the monthly. And what happens is we come up here, put a wick above those, and then reject lower, and that's just a really big monthly bearish order block. That's very far in advance, but I said all of that to say how we take these equal highs, I think, is important. So just to reiterate, for ES, we have these weekly levels. If we do get a retracement, we will be looking to see how it reacts to the lower time frame PD arrays nested in these weekly levels. So what we'll do is we'll look at the daily and we'll see, is it finding any support on this daily fair value gap? Top, con square encroachment, bottom. If we get to the bottom, we're getting through this weekly fair value gap. And again, remember, it can violate it for the chart. Price can violate a daily PD array if it wants to get to a weekly PD array that is further down in a discount. So if the weekly chart wants to hit this order block, wants to hit the top of this order block, it will gladly violate this daily PD array to get there. But then look, we have this other daily PD array right below it. So if we do get through these levels, we will then say, okay, we're targeting this next weekly. So once you violate a daily, you go, okay, what's the next weekly? You kind of pop out of a time frame. You say, okay, we violated this big daily. What's the next weekly? This is the next weekly. Okay, what are the PD? Then you drop back down. So it's kind of like you're bouncing from time frames. So then you find the next weekly that's lower. You drop down. Okay, what are the dailies at or below that? Here, daily order block. That's, and that's all saying that we come down and don't find support at this daily. So again, we will be looking at this daily. Let's go down to the 4 hour. 4 hour. In the 4 hour, we have this large, what was this? I think this was CPI. We have this order block inside of the daily. So again, we're nesting PD arrays. This order block inside of the daily. And what we'll do is we can draw. I won't draw them out for the sake of keeping the chart clean. As you know, I like doing this higher time frame analysis on the continuous charts. And then what I do is, kind of going into maybe the start of each trading day, I'll look at these levels on the continuous chart. So I have them mapped out, but they don't show up on the contract month chart. So I don't get a little too cluttered. I do fight a constant battle of like having my charts too cluttered, and I don't like them cluttered, but at the same time, I don't like not writing down levels. But we'll do the same thing that I said. We'll look at these PD arrays. So this is going to look at this nest. This is going to be very interesting if we see price come through it. But again, on the 4 hour, we have these other levels. We have this, as you can see, we found support in. I'll also, I'll highlight this order block here. Highlight the order blocks. But what we're going to do is we're going to see if we find support on this 4 hour time frame. If it violates the 4 hour, then we'll go to the next daily. Violates the next daily, we jump to the weekly, and kind of what I said. If you look at the 4 hour, you can see after we took this high, we never really showed any willingness to want to continue through it. And this, again, this green line is those equal highs that I do believe we will be reaching for. And I will be targeting until we shift structure on the weekly. But see how we have this consolidation. So again, I've said this a little bit before. When you have on just any time frame, especially lower time frames, when you finally reach liquidity targets, you're going to be wanting to look for signs that the move is exhausted. And when we consolidate, do a little bit above it, consolidate just a little bit above it, what that can be is it can be smart money offsetting its positions, because remember, they can't just sell everything they want right in one candle. It takes a while for them to unload positions, so they will be unloading in waves. So unload, run up, unload some contracts, run up, unload some contracts. So they are all out of their position by the time the market turns. And again, on those higher time frames, they trade on the higher time frames. We are at a high premium, so we need to look for signs that smart money is out of their positions. Again, we are not picking tops, so I will be targeting these, but kind of what I said earlier about how we want to make sure that on the time frames we're looking at, we are buying at discounts relative to those time frames and that market structure. This is how we're going to do it. So we're going to do it by looking at the 4-hour and finding these PD arrays that are, at discounted levels. So like down here, I like this. But again, yeah. So to like close out ES, I don't know. I want to see how Monday prints. Because again, this green level, we are very close to it. But the way we kind of consolidating, going up, finally took this liquidity, came down, consolidated, came up again, but didn't show real willingness on the daily to want to get over it. I think when Monday prints, I will be watching how we react to this down close candle right here. I think if we kind of print a candle down through it, so what, this is Friday. Yeah, so we'll have to see how Sunday opens. And then I think what will be more important than how Sunday opens is how Monday closes. Do we get through this down close candle? If we get through this down close candle, I will be looking at these levels that we talked about down here. Say you can already see on Friday, we kind of dug into the wick. I wonder if, maybe Monday we come touch the top of this body and then go to the upside. That could be a potential scenario. But again, the reason why I'm not just saying upside kind of like I did last week and the week before is because on this weekly chart, again, we have to kind of predict. We're predicting how the next weekly candle is going to appear, and I think there's a high chance that it prints as a down close candle. So much so that I'm saying I don't know yet. So yeah, there we are. I will go through, do the same thing with NASDAQ. Head over to NASDAQ, go on the monthly again. So it's going to be really the same story, but I will do it again with the levels on NASDAQ. So coming out, and we will close out with the dollar. Another thing is, about the uncertainty is the indices. I think, these highs are so close that I think I'm like, yeah, we're going for those highs, but where we're at on the dollar, I think the dollar wants to go higher on this like monthly and weekly chart, which would mean lower indice prices. So that's another reason why we are in a very big premium. We are in a premium. So we have to look for signs that smart money might be offsetting their positions. And again, for the quarterly shift back to ES, I talked about how I think for the quarterly shift, I talked about how I'm targeting these highs, but it doesn't have to go all the way up. It doesn't. I can be wrong. I can be wrong. I could be wrong. But again, we're building a narrative here. So it could just take this high, and then the quarterly shift could end like right around here. It's not a new low. It's still kind of like a bearish or a bullish structure. Like it could like come all the way down to here, come back up. Again, I can be wrong that it doesn't want these highs. They are very equal on the continuous, so I'm going to continue to target those until proven otherwise. It's hard because this run up was so quick that this is the only swing low. We only have one swing low, two swing lows in it, so it's not like we have a lot of swing lows where we can start like mapping out multiple market structure shifts. But what we use the PD arrays. We use the PD arrays for that. Okay, let's go back to NASDAQ. And yeah, we will close with the dollar. Go to the monthly on NASDAQ. Okay, monthly chart on NASDAQ. Same thing as ES. We've technically been in one big bull market. We came down the COVID low, swept this low, tapped in to this order block. I bet if you measure that body, it lines up beautifully with mean threshold. And then we took off. Came up, came down, consolidated right at a discount level, 50%, and then continued higher. We did notice how the bodies of these candles, we wick below this swing low, but we don't close any bodies below that swing low. See how all these bodies stay above? So I'm not going to count that as, well, it wasn't a shift in market structure. You will see it came up. So this was just an accumulation at a discount to continue this bullish structure. This was a higher low. We came up. NASDAQ is closer to its all-time high than ES, and I wouldn't be surprised if NASDAQ took it. And remember how I gave that whole scenario about 2024 recession, bear market. I think that can play out, and NASDAQ can sweep this high, ES not set an all-time high, and then we shift on this monthly and weekly bearish, and it's just one giant SMT. I think that could happen. So again, yeah, we are still in this monthly bull market, going down to the weekly. Okay, so here's the weekly. Take a second to kind of get our bearings. This is a new fib. This is a fib from this high to this low. As you can see, when we retraced on ES, we came back down to 50%. NASDAQ didn't. That's okay. It doesn't have to. It just shows that there was a real willingness to want to get back up here, which I think makes sense if it's doing it to kind of target liquidity. So we came down on the weekly, tapped into this fair value gap. This was that market maker sell model that we talked about. It doesn't look as clean. When I go to the daily, it won't look as clean. On the December contract, it was beautiful. Mwah, chef's kiss. On the continuous contract, it's not as beautiful, but it's still there. And I think, again, that just highlights why you should be prioritizing the contract that you're trading, that structure and those levels. But again, in terms of this weekly higher time frame narrative, they both tell the same story. So come down, finish that market maker sell model, tap into this inefficiency, and then we go higher. This is that high on ES, so we have those equal highs on ES. NASDAQ, we're a little bit above them, and the highs on NASDAQ are a lot closer to the all-time high. So zooming in on this weekly, how do we expect next week's candle to print? Well, similar to ES, we've had a pretty decent run. We came up above and took this high. I don't think it's crazy. It's not a crazy thing to say that we're going to print a down close candle for the week. Just because we print a down close candle to the week doesn't mean we're not bullish for these highs. But again, the market doesn't move in a straight line, and you have to consider that. Also, look at this weekly fair value gap. We came up and wicked above consequent encroachment, and then didn't even close a body inside of it. That right there, I'm not going to say it yet, but if you put a few more candles that look like that, and it's going to be looking like this weekly fair value gap is, again, remember, okay, I don't know if I'm repeating myself too much, because I'm expecting that you have a baseline understanding of these concepts. I don't want to be teaching them. I just want to kind of tell you the way I'm interpreting price, but I don't want to be teaching them. Go to ICT's channel for that. So this is a premium on the monthly and a premium on this weekly. And when you get this deep into a premium, you have to be paying special attention to the premium PD arrays, because that is where price is going to turn around. Price is always going from discount to premium and from premium to discount. So we have to pay attention and identify early if it's a level where it is turning from premium to then seek discount. But we'll see. In terms of the weekly PD arrays, again, pretty similar to ES. We have this fair value gap here. We have the two down close candles, and I did two down close candles. I highlighted the top of that one. No, here's what I'm gonna do. I'm gonna take this. I'm gonna put it on the body. I wanna highlight that body first. Cool. So high, body, next high. This is also a breaker structure. I had it on ES, but I didn't draw it over. We have this low, high, lower low that took liquidity, shift. So we do have this breaker structure that lines up really nicely, is nested really nicely with these PD arrays. It was also there in ES. I had it drawn out. Forgot to mention it. I had it hidden like this. So the top of this breaker lines up nicely with these weeklies. Notice there is a weekly here. And it could hold off price if we are still really bullish. But again, we will go into we will have to watch the lower time frames and see, watch it violate daily fair value gaps a few times before see if it finds support on daily fair value gaps. Because if there's a daily fair value gap inside of here, that this actually is a daily. I just didn't set the settings right, the visibility. But we'll look at the lower time frames to see if it's finding support, and then we'll say, okay, it is listening to this weekly. We don't have to worry about these weeklies. So again, I think a down close candle is likely. I think the draw is still to the buy side, so that is why I'm saying I don't know. Let's wait. It would be smart to wait for Monday. Okay, here's the daily. So as you can see, I've highlighted some of these daily PD arrays. Let me zoom in a little more. We have down close candle, daily break, bullish order block. We have this daily fair value gap. Remember that daily fair value gap is nested inside of this weekly one. So we have these lower time frame levels that we will watch to see, okay, all it wants to do is touch into this weekly. It doesn't have to go all the way down here, but we will pay attention to which lower time frame, when I say that, I mean 4 hour to daily, does it want to look like it's finding support at. So down close candle, daily fair value gap, another down close candle. We have in the 4 hour, very similar to ES, we have this nested 4 hour fair value gap nested inside of the daily, nested inside of the weekly. A similar, do I not have it drawn out? Similar thing to ES, like I said, we are wicking above these highs, and we're just wicking above them. So this could be smart money offsetting its long positions because we are in such a deep premium. It's right, look, we wicked right above this weekly fair value gap, and we'll want to see if it breaks lower. Yeah, so I think Monday, tomorrow, will be very indicative of how the week looks. We have this daily again, so maybe we come down and on Monday, on the 4 hour, we show a willingness to really find a lot of support around this daily level, which is also on the 4 hour. Looks like it could be a 4 hour order block that lines up nicely with a daily order block. It could sweep this low, could want to sweep these lows and tap into this. Again, remember, if we're printing a down close on the weekly, it's going to be multiple down close candles, black candles, red candles on the daily. So we could print like 3 down close candles on the daily. That really brings us into this daily fair value gap. And the weekly candle ends up just being one down close week that's tapping into this. That really is just a pullback before going higher. We could just open and go higher. That's why I'm saying I don't know. And that's okay to say you don't know. I think something that I started to find that really helped me gain traction in trading was when you don't know, just don't do anything, because if you start to find, you will find times when you do know, and then when you do know and you execute and you are correct, that's good trading. Waiting until you don't know and only executing when you do know. And if you're like, oh, well, I never know, then, well, you probably need to do more. You need to do more studying and build out the analyst in you. But again, if you are somebody who at times, has put the time in studying, developing that analyst in you, you're not always going to know. There was times when ICT was just like, I don't know. There was actually a decent amount of times where he said, I don't know. And then he'll just post some pyramid trade that he took midday. But it's probably because what happened was he said he didn't know, but then he saw something develop in price. And it was like, oh, I recognize this structure. And then he was like, if I see it do X, Y, and Z, I'll execute on that because I know what's happening. And then it did X, Y, and Z, and he executed on it. And, you can be the same way. And, in the beginning, it might be more far and few in between where that happens. And, as you get more experience, that gap shortens on, how frequently you understand what's happening. But if you are somebody who, there are times what's happening half the time, wait for that half. That's that's how you become a great trader. I think, really, really good traders, they're people who move to the sidelines when they don't know and execute when they do know. And I think something I've been kind of, I guess I'm speaking to myself now, is when I started this channel, I do want to, stream for you guys, but I do feel a pressure to do stuff when I don't know what's happening because I am recording myself. So side note to myself. But yeah, so we are above this high. I think that we took it. We could see a down close candle on the weekly, and we could get a down close candle on the weekly just to target these all-time highs. And the crazy part is I would not say we shifted structure until we break below this low, which is a long ways to go. So we could have 2 down close weeks, and I would still say we're in a bullish market structure. It's just a retracement, you know. Again, because I think if we broke this low after sweeping this high and tapping into this premium array twice and we broke this low, I would start to consider lower prices. But again, we could just go straight up. We have a lot of room to retrace before going up. So Monday will be interesting. Let's go to the dollar. So get this junk off the dollar. I've been trying to mess with these layout things, and I don't really understand how they work 100% because I never used to use them before. Here it is. Yeah, like it's weird. Like if you switch the layout, like it treats it as it's 2 different like templates for the dollar. I think you can change it if you go sync globally. So I'll have to look into that. But this is the dollar chart I wanted to show you. Okay, yeah, let's go do the dollar again on the monthly. On the dollar, I really highlighted this huge range right here. Big range. Notice how we consolidated at 50% of it, and then we came up. Again, this is still bullish structure in the dollar. Low consolidation here. Came up very quickly. So all we did was retrace. This is just, as far as I'm concerned, this is a higher low. You can see we came up, came down, consolidated, dropped down, swept the sell side, entered into this inefficiency, and then shifted market structure right here. We shifted market structure higher. So on the monthly, we have these order blocks. And again, this is the monthly candle. So this candle is actually going to close at the end of next week. So it would be interesting to see, does it come down and touch the body of this candle? And again, remember how does it come down and touch the body of this candle? Maybe it does. Maybe it retraces a little higher. This higher move in the dollar correlates to next week being a down close week on the indices. This month on the dollar closes out, and you can see a body respecting this high, and then that would make sense. That's a narrative that we just built right there. But again, I think the dollar's still bullish, but it does look like it's retracing, and that's kind of also where. Again, remember where we are in the indices. We're in a deep premium on the indices. So with this market structure still bullish, I could see. That's why I think the indices could turn. And gave you that whole story on 2024 and how we end up going lower, because I think this dollar structure is still bullish. Now, if this dollar structure shifts bearish, I think when we get above those highs on the indices, we could be talking a different story. We're talking continuing past those highs. But again, that's why, we use the dollar to help us build this narrative. And we're just going to have to wait and see if it does actually shift. I'd want to see it close below deep into this wick before I think we're shifting structure, and we have some time. So let's just focus more short term. Going down to the weekly, I highlighted a fib from this low to this high. As you can see, these monthly levels translate to the weekly pretty nicely. They're very correlated very strongly to this weekly candle. And all we're really doing is in this range from this low to this high, we're back at 50%. We're in a discount, possibly to go higher. So we're in a discount. I guess maybe a scenario that could play out too is next week candles open and it retraces into this weekly fair value gap, and so it's dollars going up. That's how we get the narrative, or then we get the indices giving that pullback. So that could happen. Daily on the dollar, you can see we came down, and I had it mapped out in the past weekly videos, but when we broke, so I was pretty proud of this call. I called us, turning around right here off this order block, and then we sent lower, and when we did send it lower, we were targeting sell side. I had it drawn out in previous weekly videos. Sell side. Inefficiency, next sell side. You can see we broke below the inefficiency, closed below it, came up above it. Look at the bodies, beautifully respecting the constant encroachment. God, I don't get how you see that and don't just believe in these concepts of an algorithm. Whether you can call it a coincidence, but it happens so perfectly, like consistently. It's like conspiracy theory or not, like it's happening. So let's trade it. So use it as an inversion, sent it lower, but again, back to the weekly. I'm curious as to how the next week does Monday open up and it shows a willingness to go up and tap into this efficiency. It can tap into that efficiency to go lower. We'll have to see. But here are the daily levels. I'm not going to go into the 4 hour. I'll go into the 4 hour when we are, getting ready for a trading day. But I'm just going to stop at the daily here. Again, we have the sell side. I think we could retrace into this 4 hour, and the daily. Maybe not. So we'll watch and see. And just to reiterate, again, bullish structure still on the weekly and monthly for Dixie. So it is retracing, and I could see this retracement allowing for us to take those highs we spoke of on the indices, and then what it does is it continues its bullish structure, and that makes the indices roll over into 2024. I could also see it coming down and the dollar shifts bearish. We continue over those highs. And remember, those highs that we spoke of, our quarterly shift highs, they're still our targets. So again, this is why trading can be so difficult, because we can take these highs that our quarterly shift targets. We can take them, and then the quarterly shift can end like down here. You know what I mean? We're still right. We could take these highs and start breaking all-time highs. So again, we'll lean on the dollar to help us figure out which route it's going to take. But we are, again, the reason why I am hesitant to give an answer is because we are in a deep premium. That's not the chart I was looking for. We are in a deep premium in this bull market run. So, but we're not going to pick a top. So we're expecting a retracement. You're either going to get a retracement to send it higher, or we're just going to go straight for it. We'll have to see how Monday prints. Hope you enjoyed this video. And thanks for watching.